Okay, so boom. So everyone's talking about this Amazon 20-for-1 stock split and also this buyback. A lot of people are not indulging on this buyback, but you know I'm going to give you the tea around that, right? So this Amazon 20-for-1 stock split is giving Mr. Me Too vibes, you know, clips. Why? Because Google just announced it not too long ago, a 20-for-1 stock split. But here are the logistics around what this would mean, okay? But just because a company announces a stock split doesn't mean you have to go get it. It depends upon your positioning, how much money you have, and also your portfolio objectives and what you want to do. So here are 3 things I want you to pay attention to as an investor within this stock split or anything else. Specifically with this one. Okay, 1, the positioning. So with this one, do you need volumes of shares or do you want to capture the value? But this could actually weigh different on different scales depending on the portfolio. So before the stock split, you might want to get those 20 volumes of shares, but you might want use the volume, the value is still not going to change. Keep that in mind. But yet on the flip side, you might still want to capture it at $150 a share, but you still could potentially buy 20 shares of stock. But yet, keep in mind, you still can do the fractional shares, you still can do the index funds, and you still can do the ETFs. There's no one wrong way to run this, but yet and still, don't go buying this and getting loans and just because this right here is happening. Do your due diligence with this. Okay, 2, going over to the company. Do your due diligence about the company, period. Amazon is just not Prime. They are AWS. They have Teladoc. A lot of people are not talking about Teladoc and these companies right here that falls on the infrastructure of Amazon. Look to see how their earnings have been performing. Look to see how their cash runway. They have plenty of cash. So look at the pulse of the company before participating in this stock split. So do not compare Amazon's stock split to Google's stock split to Tesla's stock split to Apple's stock split and so forth and so forth. Do use them as a cliff notes, but not a compass. Okay. And about this buyback, so buybacks are not necessarily a bad thing. They are legal, but yet and still, this one I'm intrigued that they're announcing this because buybacks is when they buy shares back to help create value within the shares. So actually, when they do this, it could actually drive the price up. So this can be a contingency. I don't know. Interestingly enough, with this right here, this could actually push Walgreens out the Dow. So I'm intrigued to see how this happens, contingent on if the shareholders vote for this to happen. So keep those 3 things in mind with this stock split. That's it. So I know I just talked about in my real TikTok about the Amazon and 20-for-1 stock split. So a lot of people hear the whole notation about stock splits and wonder, should they even participate? My theory is it's up to you and your portfolio objectives. A lot of people do not talk about portfolio objectives because they hear financial objectives and stock splits and all that and get confused. So when it comes to portfolio objectives, you need to look to see what are you trying to achieve. Is it gains? Because interest or even with dividends, Amazon does not pay a dividend. Amazon does not pay a dividend. Let me repeat that for you. Amazon does not pay a dividend. So if you are on the side of capital gains, Amazon is good for you because as we've seen the last, the stock split was what, $19.99, and you've seen the growth since then. Just go back and look at the prospectus and historical data. So the last stock split was in 1999, and we've seen how it has grown. So the capital gains would be astronomical, correct? So if that for your portfolio objectives is capital gains, Amazon is a great one. Amazon is already one that holds a lot of weight when it comes to investors because investors hear Amazon stock. Or for when it comes to stock to invest in, it's always go with stocks that you know. I say that a lot. So it's all in looking into your portfolio objectives. Do you want just capital gains, or do you want dividends, or do you want a diversification within your portfolio? Hey, with me, I want all 3. So look within this stock split. Maybe you have the cash to get it in before the actual stock split, or do you want to wait until it gets to 150, or even it could go down before then, 138 to 150. That's why I put that range, because it could actually fluctuate between that time, because we're in a very volatile environment right now as investors. So it's all about understanding what your portfolio objectives look like and how this stock split aligns with it. And like I said, just because you see a stock split is announced doesn't mean that you have to go and grab. So it's all about understanding what that looks like for you as an investor and aligning it to that. So while I gave the insight of what that stock split does, because this is what I'm supposed to do, but taking it a step back to tell you that you need to take insight to your portfolio to see how does it fit. And if you're already an investor like myself, it's fine. So interestingly enough, my first fractional shares of stock were for Amazon. So even if you don't have the $3,000 right now, you still can utilize the stock split to even buy fractional shares of Amazon right now. And think about when it does get over to $150, $130 a share, you could even accumulate that even better on fractional shares, or even look to ETFs or index funds. So it's no wrong way to accumulate Amazon on this stock split. So maybe Amazon doesn't fit for your portfolio objectives right now, or maybe Amazon is not your team right now. So it's no right or wrong way with this. So I was just giving insight, and I want to give a little bit of backstory, a bit of a little sneak peek beyond that, because TikTok, and Google, and all that doesn't give you. So social media doesn't give you all but so much insight and so much leeway to talk. So I wanted to give a little bit more insight into this and what you should think about when it comes to this Amazon stock split. So just because you hear a stock split doesn't mean you have to go get it. It's just to make you take an analyzation of your portfolio and to pay attention to see how does this fit. Does this fit? Do you already have it, and do you might need to add any more to your position, or hey, do you might need to stick where you at, or this don't fit the time right now. So even if you can't get the full 20 shares, maybe you can get a fractional share. Maybe the ETFs or index fund that you already have are fine. You're still going to see it shift around a little bit. It's going to shimmer and shake. So it's no right or wrong way to play this. But also something else to keep in mind is that just because it's doing that doesn't mean you have to. I also talked about how you should not utilize Tesla, who is that? Apple and other stock splits as compasses. You should utilize them as cliff notes because you can't compare other stock splits. You should only compare within whatever they have done previously. Amazon's previous stock splits compared to this one. Don't utilize other stock splits to compete apples to oranges, or tomato, as they say it on social media. Utilize that. So don't use them as cliff notes, and it's not a compass for how you move with this. So there, like I said, it's no right or wrong way to move with this. So just utilize the insights that I gave you within your own due diligence to figure out how this plays for your portfolio, your paper, meaning your money, and just figure out how does it work. So it's no right or wrong way. So you have enough time, but like I said, a lot of people are not talking about how it's contingent upon shareholder vote. But what is already a go is the buybacks. The buybacks have already been approved. So that's already there. Buybacks they've been talked about a lot. A lot of companies such as Apple and other things, other companies are already starting to do that. You've been seeing that in the news, especially during this pandemic. So that's not confused. Just not confuse that. Okay. So to see Amazon doing this right now, that's not a bad thing. Companies do it all the time. Okay. It's tomato. It's nothing. So if you see Amazon doing it, do not get alarmed. It's okay. But the fact that they're doing it in counterpart with this 24/1 stock split is interesting, because it's already showing you they're trying to go ahead and try to correct and pull up that price almost instantaneously. Hopefully that happens. But that's it.